with the Democrats. Okay, so there you have it. I'll repeat the levels again. Our pivot is 35, 34, 35. Support 30, 22, 11, 04. Resistance on the upside of 42, 50, 57, and 63. All right, and I'm just kind of hanging here. All right. As far as any numbers this morning, not that many, but we do have a bunch of Fed speaks at 9 o'clock, at 11 o'clock, at 12 o'clock, and then at 1 o'clock this afternoon, Chicago. These are all Chicago times. The Beige Book is coming out. The Beige Book is a compilation of all the Fed banks, some kind of synopsis of what's happening at all the different regional banks. I think there are 7 of them across the country, and they come out with this once a month, this analysis from all the different banks, Fed banks. There's banks and then there's Fed banks, and the only people that can bank with the Fed bank are the banks. That's the banks for the banks. It's the bank for the banks, the Fed banks. So there's 7 of them across the country. If you look at any bill, it'll say which bank it came out of where they printed it from. There's a little somewhere on a $1 bill or $50 bill or $100 bill or whatever bill. In Don's case, it's $1,000 bills that he flashes around. All right, we're just kind of range bound here again. Again, it's not surprising. We have to just be patient and wait for the market to have a reason to move. It's kind of stagnant right now because of the lack of progress, or maybe there is progress. I don't know, depending on how you look at it, I guess. All eyes on Tesla third quarter results this afternoon after the electric car maker reported record vehicle deliveries earlier this month despite the global pandemic and economic upheaval. Elon Musk has struck a forecast of delivering 500,000 vehicles in 2020, and his latest commentary will be of particular note. While several analysts believe that the goal is attainable, it would mean Tesla must deliver more than 181,000 vehicles in the fourth quarter, a 30% increase from the record third quarter deliveries, I guess last third quarter. So they're doing good. Snap, Snap soared 25% almost after hours on record third quarter earnings that crushed estimates, while tracking the highest ever number of advertisers on this platform. That's due in part to the summer boycott against Facebook, which saw advertisers take their money elsewhere due to the social networking stance on hate speech. Meanwhile, the pandemic subscription boom faded for Netflix, which only added over 22 million subscribers last quarter. Shares fell 5.4% as the company said additions in 2021 will be down compared to the year if the world recovers from the COVID pandemic. We are just range bound here. Not much happening. Again, for those new folks that are joining us today, we are trading future contracts, specifically mini S&Ps. We don't believe the markets go straight up or straight down. Consequently, we are looking for those inflection points where the market will bounce off of, give us opportunities to make money. The objective today, and this objective is mostly due to the volatility in any given moment, not even day, is about 2 to 3 points at this juncture. That's your stops and also your profit targets. And we use our levels to find those inflection points. Levels that I gave out already, and if you didn't get the levels, if you look at the chat box area, they're in there. If you want to ask me a question, put them in the chat box area. It'd be easier for me to see it because I have that window up versus the Q&A section. And then once we have these levels that we give out as those inflection points, in addition to that, we also have price action opportunities that occur once the market paints some bars, and together we put a methodology that will allow us to take advantage of those opportunities and a taught experience. So basically, we have an education course that lets us teach you how to find those inflection points and also show you the price action opportunities that occur in the market once once they paint some bars. So it's something that we work on every day. We're here. We used to be on the floor of the exchange, but the floor of the exchange kind of shut down a little bit because of COVID. We, I guess, are lucky because we have the opportunity to keep on trading. And you, because you're home anyway, you were never on the floor, but so it's kind of, it's a no big deal, right? Floor was fun. I traded on the floor. I traded in the pits in Chicago. I traded in a bond pit, the S&P pit. But started trading S&Ps once we started moving over to electronic trading, and then the pit kind of became obsolete almost. They're still using the floor for option traders because they have too many. Well, they have a lot of different strategies that they implement in options that are hard to duplicate on the screen for them. So, and some of these guys don't like to show their hands. So consequently, a nice little pop-up here for us against our quick will. There's always something going on, right? Just never know what's happening. It's quiet, and all of a sudden, welcome to volatility, right? Somebody could have said something, done something, So, and it rotates back, and when you see this quick move and it rotates back, if you have multiple contracts, maybe letting go low because you're like wondering what the hell just happened. Well, I don't know. It could be some news, so if you didn't take your loss there, just cut your losses there, only because of the way it's not. I mean, it's been quiet, and all of a sudden you get this like influx of buying for a reason. So you're given a quick chance to at least minimize your risk a little bit. And there's many ways to minimize your risk, right? But it gave you a quick rotation back to minimize your risk a little. And I would have probably just taken a little bit off and just see what worked the rest. No reason to think that you have to stick with the trade if the market's not telling you it's doable. I mean, we don't know, but this was a little weird. Anyway, so it's working to 42 if you didn't get out, or if you have a little bit left over, then keep your stop in, obviously, and then go on to the next level, see what happens. Obviously, we're looking a little bit of rotation. We kind of slip right through very easily, went through our green band, went through the level really quick. So, but it's giving you a chance here to get out of it a little bit. See what happens if you get a nice little push back down. Anyway, but again, we are always, at the mercy of news that comes out that we're not privy to. Even if we were privy to, we'd probably mess it up. To be honest with you, probably get the wrong position because we're thinking something or not thinking something, and we think it means something and it's not. But you never know. But they go back down to 42 there again. Like I said, gave you a chance to get out. Since I don't personally like the price action when it came up here like this, so that's what I did. I mean, you have to take what the market is telling you sometimes and not be stubborn. And I've said this many a time. Sometimes the best trades I've ever done have been scratches. That scratches means you buy it at 42 and you sell it at 42. Just in case some of you don't know. Yeah, like I said, continues to uptick here. Sometimes you just got to take the price action and it's telling you something. No reason to react any other way to it except to understand and move on. Next level on the upside we have is the 50 area. Yeah, somebody must have said something. Maybe they agree on some kind of tentative plan. But like I said, even if they agree on a plan, if McConnell doesn't put it's not going to happen. And from what I understand, there's some infighting with the Republicans in regards to too much, and they might not be able to get the votes, even if they do agree. But you never know. You never know what's going on. But yeah, so somebody, again, like I said earlier before, we are not privy to some information sometimes, and you have to take the price action, kind of react to it. And hopefully we did. And hopefully you did. Like I kept saying, we should scratch it. well, it's still good. It's under the same band. I mean, if it's a little bit too risky for you because of the way it's moving, then don't take the 50. You got to make that determination for yourself, honestly. So maybe make, yeah, I mean, I'm just going to tell you, it's a level. How it reacts to it or around it is, given the price action, you have that choice of not taking it because you feel that it's a little bit too risky or not. But we're out of the first level, I think, pretty unscathed, or if a little bit of a loss, hopefully, if you were listening. And now we're coming up here to the 50 area. Again, you can keep it in, or if you think it's a little bit too strong, to cancel it, wait for the next level. Or lighten the load, different ways of trading it, right? You can just trade a little less, take the upper end of the range, something, adjust a little bit. There's different ways of adjusting. I don't have a red phone or a hotline into what these people are saying, or even what the market is going to react to, right? Sometimes we might think it's important and it's not. Can I get one? Well, yeah, I probably could, but it would mean that your guys' fees would go up because I'd have to pay for it, which means you'd have to pay for it. But we could make it happen. Yeah, just know who to pay off, right? And that shouldn't be that hard in Washington. Oh, I shouldn't say that. Brad's going to remind me that the black cars are in my front of my house waiting to take me away. The black SUVs with the tinted windows. All right, we did get a quick drift down to 47.5 there. Again, you got to take what the market's giving you a little bit. Don't force it. Don't fight it. Take what it's giving you, considering we see what's happening with the market, right? And you have to, we did dip down right to 47.5 there. I don't know if you got filled or not, but maybe you were able to at least get out of some of it. You did get filled at 9.5, that's for sure. You just, you have the ability to make adjustments. There's no golden rule that says you have to either take your 2 points or have to take your 2-point loss, right? There's no rules like that. There's just goals. We try to stick to them most of the time, but you have to see what the price action is and then act accordingly. And for right now, the last 10 minutes, some goofy price actions going on. Good morning there, Sam. Can you repeat the levels? Can you put them up again there, Sardar, again, one more time for me? I'd appreciate it if you can. There we go. Thank you very much. There are the levels in the chat. Thanks again. I appreciate it there, Sardar. I should learn how to do that. I mean, I do know, but I should learn how to do it. I know, whatever. I guess it's a lot easier for me to ask you. All right, if you did get on the upper end of the range, right, which again was a suggestion of maybe a 51 even. Yesterday's level was 51 that was working pretty good. You did get paid off here a little bit. Again, just make a little adjustments to what we're doing. It's important to understand that nothing is etched in stone here. Everything's, we're adaptable. We have to adapt to market conditions. And we're just kind of walking you through this right now. Same way I would be walking through it, trading it. I am telling you what I'm doing. So you don't get to, you, the trick here is not to get too excited about what's going on, right? That's the trick. I mean, just understand it, see it, and then react to it. Again, there's a ton of Fed guys who are talking. They usually, the main Fed talk that's going to affect the markets is going to be obviously the big man. He's not talking, but they could move. I don't know if any of these Fed speaks would move the market this much. Again, if you took the upper end of the range there, it got down here down to 48.5. So maybe if you did, maybe you took there, you get a little bit of rotation there. Or even if you made it up to 51, even I think that could have been a viable entry point there for you. Anyway, like as far as the Fed speaks, they're out there, and you may get a little bit of a move. But I don't know if we can't worry about all of them all the time. That's all I'm trying to say. You worry about some numbers, and then if there's some movement in the middle of the day, at least you know why. If you want to minimize your risk a little bit and not trade when you know there's a Fed speak, then yeah, I would be careful. Again, they're talking at 9 o'clock, 11 o'clock, 12 o'clock, and the beige book. Now, the beige book at 1 o'clock later on this evening, or this afternoon, I should say, is probably more important than any of those. So that would probably make the market move a little bit if they say something goofy. Up here now, the next level is the 57 area. So the 57 area, and then I gave you 63. And I'll give you 70, 75, and 84 above the 63. 70, 75, and then 84 above. We have 57 next, and then 63, 70, 75, and 84. Thank you. All right, so we're hanging up here, seeing what it wants to do. Again, we've been working you through these trades. Could you have gotten long anywhere? This is, I don't know. We were so range bound. We have been range bound. There have been some good solid levels of resistance up here. It's tough to say that it could have gotten long. Blue band, okay. HT suggests the blue band. Yeah, I could have held there. That's a good possibility. Yes. Or yeah, blue band, push above maybe even the 40. Yeah, blue band probably was, if you down the 34-ish area, which is around our pivot, you would have probably had to do both. You would have had to buy the 34 area and the 30 area if you wanted to get long. All right, so now we're just hanging up here on the highs. I mean, basically, we're coming into the same range we were in yesterday afternoon. That's not a pleasant thought. It's not a pleasant thought whatsoever. U.S. stock index futures are hugging the flat line with traders in wait-and-see mode as the coronavirus aid negotiations continues to drag along, citing progress in talks. The White House Chief of Staff Mark Meadows said the administration offered is now at 1.88 T, while the White House Nancy Pelosi said she's pushing for 2.2 T, along with a number of requirements for how the money should be deployed. The biggest difference is center around state and local government aid and liability protection for businesses, but an agreement must be reached by the end of the week in order to have legislation ready before Election Day. They love just pushing it. They love just waiting until the end. I mean, Trump needs a win. I mean, he needs a win to, he needs a win someplace. Someplace. I know his folks are saying he's doing everything right, so he does no wrong, ever. He's a man. Just like those Los Angeles Dodgers, they're the man. They're winning like crazy now. See how I equated Trump and the Dodgers? Do that to me all the time. Oh, that's for all my West Coast friends. Oops. Continuation rally here. Who knows? I'm looking to see if there's any, I don't have my, even if I did have my board sometimes, with the news, when we're on the floor, sometimes you just get a move and you have no idea what's going on. And that's kind of what's going on here. You do that to me with the golf course all the time. Listen, you need the fur coat. I don't. I don't need to be in fur at 50 degrees out like you do. You told me about your fur slippers. It's bad enough. All right, the market continues to be strong here. We got the 57 area. Again, we've been kind of walking you through these levels for whatever news that's come out here about 15, 20 minutes ago. Market's reacting to it. Okay, let's see what'll happen up here. While the United States Department of Justice and 11 states filed an antitrust suit against Google on Tuesday, shares of the tech giant closed higher due to the case's narrowing scope and the latter pledging to fight back. It's still being called the highest profile antitrust case by the United States government since it took on Microsoft in the 1990s, which resulted in the company agreeing to share computing interfaces through though it was not broken up. At the heart of the current lawsuit is Google's search business and allegations that the tech giant uses deals with distributors to make sure its search engines is the default for the U.S. customers. Yeah, well, they are pretty big. That's all I can say. All right, we come off here a little bit, got up to the 55 and change area there, of course. Almost to 56. Just missed out a little bit, 55.75. Coming off here a little bit. Yeah, well, I would have liked it to go up just a little bit longer so we can get filled, but it didn't. You know, the 57 is a little bit tenuous there. We get back up there. Playing catch up in the business merchant sector, JP Morgan is rolling out a checking account paired with Quick Accept, pushing into an area pioneered by Square and PayPal. The service lets businesses take card payments through its mobile app or contactless card readers, while users will see sales hit their Chase account on the same day. The company will soon migrate a larger portion of its more than 3 million sales business customers to the new service. That's a good thing. Yeah, I think that would be about right there, sir. There. If this flags here a little bit, becomes to the point where we won't even take it. We'll see if it does flag or not. So that's a good idea there by Chase. Their new service, Quick Accept. Quick Accept. That's cool. Walt Disney is blasting, I should say, California's new protocol for reopening theme parks, saying that the strict guidelines would complicate the company's efforts to reopen Disneyland, which has been shut down for 7 months. The park can only operate under Tier 4 yellow restrictions, limiting capacity to 25%. A reservation will be required, and no day of sales. Okay. Disneyland president also pointed the company's record is reopening the theme park in Florida, Asia, and Europe, as well as what he called inconsistent standards for different California businesses. Well, I know it's kind of tough for all these people to hang in there. It doesn't matter what size company you're at, right? This is a weird time we're going through. We got to get past this. Got to be sooner, hopefully, than later. Nobody likes this. I hope this second wave is going to be brutal, I think. I don't know. Or we are third wave, depending on how you look at waves. All right. Again, looks like we're kind of flagging here a little bit, maybe. If that's the case, the 57 area would probably be not doable. The latest edition of GM's plan to shift to electronic and autonomous vehicles through 2025 is the GMC Hummer electric vehicle sports utility truck. Ooh, wow, that sounds good. I thought that they discontinued the Hummer, but they're coming out with a sports electric car sports utility truck, which is available next fall at a starting price. Oh goodness, $112,595. Whoa. The specs: 0 to 60 in 3 seconds. Holy schmolies! Wow. For electric car, those are quick. Oh, you're getting one of these, Tim. I can see this happening right now. You are definitely getting one of these babies. You're gonna go from the from your, what was that little car called? That little thing that you had there? Macan to this big Hummer. I'm sure your wife will love it. A little toy for the garage. 3 seconds to 0 to 60. An estimated best in class 1,000 horsepower. Wow. Fast charging of up to 100 miles of range in 10 minutes and more than 350 miles of range in a full charge. 10 minutes to go to 100 miles. The Hummer will hit the road alongside significantly cheaper models from rivals like Ford, F-150, Tesla's Cybertruck, and wow, that sounds like, wow, those are going to be nice cars. But 112,000, wow. A little hefty price for a hefty car. All right, well, we did get right up to our 56 and a half. Once you know it, got up to 56 and a half, and like a 10 lot traded up there. Once you know it. Buy one for each of the girls. Are you kidding? They would think I'm an idiot. They would take the $112,000 and say, "You're an idiot." They don't care about cars. One of them doesn't even have a car. She just lives in the city and doesn't even have a car. You know, she hates to drive. But actually, 2 of them don't have cars, and the others, yeah, 3 of them. One of them has a car that never drives it. You know, only when she comes up to family things, and she hardly comes up to family things. And yeah, they just don't drive anymore. Well, one of them does drive. Well, she used to drive because she used to go back and forth. All right, so again, we did get up to 50. So but we did not get filled up there. I don't think he got filled. If he did get filled, nice, good move. Obviously, now that levels become a little bit more tenuous. So let's not worry about it. Flagging again is like when the market kind of stays in a little range, it pops up like it did, which is a flagpole. If you see it, and then it stays in a little bit of a range there, that means it builds this flag like right in here, and then it usually means it's a bullish sign. And if we get above the top of the range there, it's going to extend a little bit. So the technical term for a technical thing. Anyway, so because we didn't get the 57 there, well, I mean, only a few traded up there. We're talking about this fancy card that Tim's going to get, and then he's going to come over and let me drive it once. Don't forget, Tim, it comes out next year. Don, this is an electric vehicle. It's not, Don's giving me the breakdown for gas. It's not happening. This is an electric vehicle. Stick it into the wall and it just juices up. No gas needed. He's getting the rate 112,000 divided by $2.50 a gallon for gas. It is 44,800 gallons of gas. Well, I know. Well, that's why the car is like on it. That's why you're probably. I'm gonna have to borrow your when you buy one of these. That's why I'm gonna. I already tried to get Tim to buy one, and he said not gonna happen. So I need you to get one now, or get a couple of them, so you can drive around the farm there, check everything out, get around really fast. You don't have to buy gas anymore. That's it. So anyway, you can tell some of the new folks that are in here. We are trading mini S&Ps. Obviously, we're waiting for something to happen in the market. We are trying to scalp the market with the levels that we've given out. The levels that we've given out are going to be hopefully posted in the chat here in a second for me. If I can get Serdar to cue me up. Anyway, but we are scalping the market. We're looking for 2 to 3 points on our trades. We also use the price action activities that when the market paints on bars to give us new opportunities in addition to the levels which are in the chat box area there. Thanks there, Serdar. And those opportunities plus the price action opportunities give us the ability to find some trades in this market that's kind of quiet. That's why we're talking about electric vehicles. I'm trying to get one of my customers to buy one for me. Why not? If I can get that to happen. All right, not buy one for me. At least let me ride in one. They can keep it. I mean, that's all I need is just for 1 second. I don't need to. Oops. My daughter sent me this. I have no idea this was happening. Oh, it's my daughter. That's good. That's funny. All right, so again, we are kind of hanging around this 57. You can tell there's a little bit of resistance up here. It's not running through it. See, somebody else has another breakdown there for you, Don. He goes, actually, it's pretty cheap considering a Lamborghini is $500,000 and does 0 to 60 in 2.5 seconds. So comparatively, you're getting a good deal here. See, we got all kinds of experts here on this room, as we did get up to 57 this time, and they break off of it as we're flagging. So if you did hang in there with the 57, if you adjusted a little bit to the upside, nice little quick trade, top end of the flag. So could have maybe made a case for it. Again, it was a little risky, and I know some of you still took it, and some of you did not, which is fine. There's no, like I said, there's no reason that you not all have to be in here sticking with it. No, I get it there, Sudar. I mean, there's nothing wrong with saying no to that. No, nothing wrong with the blue band trade there. Taking blue band. Well, I mean, no, if you're just a blue bander, no, there's nothing wrong with that at all. The blue banders must be rich now. They traded for the last 2 weeks. I think if they're trading for the last 2 years, they've been doing very well. Let's not sell ourselves short here on how good the blue band is doing. All right, just kind of hanging here. Again, the 57 area was some good resistance, even though it was kind of flagging up there, but it's the top end of the flag. It's not running away from us. And if you could have wanted to put a point stop on there, if you had a really tight stop, you know, maybe a point and a half even, if it did break through the top end of the flag there, again, you can adjust. There's no reason not to. Don's breaking down the 44,800 gallons of gas that he's getting also. He said that if he buys 44,800 gallons of gas and he runs at 18 miles per gallon, which is kind of low, but for his big cars, I guess that's not bad. He could drive 806,000 miles. Basically, doesn't he can probably go to the moon and back, right? With 800,000 miles. I don't think they do it in miles anymore. So that's how he wants to spend his $112,000. The guy from the West Coast is telling you, better start leaving now to get your 800,000 miles in. Might take you a while. He said that's one trip around the farm. Uh, so you think I was joking about his farm estate? I wasn't joking. We gotta break up the lack of trading with at least some levity here, I guess. Again, so next level above is the 63 to 57. Definitely worked a couple times, depending on if you were brave enough willing to take the risk, all those things. And if you did, then you got paid off. There's always a risk reward in this game, always. Right? There always is. Well, well, it did. It kind of went up to 57 first. We might come back down to 51. How's that? I still do that. Who knows? All right, I'm just hanging here, seeing what we want to do. Yeah, you know what? They those size, the number of orders in there, they're there for. I mean, there's really not that much. 300 and 200. I mean, it looks a lot because there's only 100 up and down the ladder ticket, but they get swallowed up quickly. And there are, even though they only show 100 or whatever, sometimes there's more traded at that price than you can actually see because it just happens so fast. And these computer algos just keep it like sell 100 but only show 50, or sell 300 and only show 50 in the ladder ticket, because that's how they can do it. You know, they can program it to, okay, I just want you to show more than a 50 lot that I want to sell, but sell me 300. As we're coming off here a little bit, support would be back around the 42 area right now. Even better would be probably 40. All right, so the 57 area, as tough as it was up there, to get in, maybe if you did get in, if you took maybe lessen the risk, you were able to get in and take advantage of it. We talked you through the 42 and the 50 area as the market was reacting to some kind of news that was coming out or hitting the market at the time. And so we talked about how to trade around it, how to, sometimes it's easy to trade the level and there's not much work to it. It's kind of gives us an easy entry, an easy strategy, exit strategy, but sometimes you have to work the level, and sometimes it's not that simple, and you have to actually, cut down the number of contracts, cut down the entry, adjust your entry points, maybe take less of a profit, maybe take a little less of a loss because the market was kind of reacting one way. So nothing here is solidly. You have to keep your stop in at 2, and you have to keep your profit target at 2, because it's not, we had to work through those levels because the market was giving us or telling us at that moment in time something different than our usual reaction to market movements at that time. There was some news coming out that affected the market, that reacted, and the market was reacting to, and consequently, you have to adjust to what the market was telling you at that particular moment in time. So that's as a trader, that is the advantage that you have, is to be able to make those adjustments on the fly. And you're given maybe half a minute or a minute or two to make those decisions up and make those adjustments, because you see what's going on. Versus an algo, if you had an algorithm or you had some kind of straight up method of trading, that you wouldn't be able to make those adjustments on the fly. You would basically have to let the algo kind of do its thing. And that's the difference between algos and algorithms and traders who are hands-on. As a trader, you do have the ability to make those adjustments on the fly, and as the adjustments present itself, because the market's conditions are presenting itself to do something. So you are given that opportunity versus an algorithm where you don't have that ability to make those decisions as quickly as you would when you're trading as an individual. So that's just and that's why some of these algos don't work out, or because they don't make the adjustments either quickly enough, or some of them don't even make the adjustments at all, which is a bigger problem, but it's another story. So, but anyway, that was the perfect example here today of a couple of levels that we actually had to work through. And even the top level here at 57, we talked about how we adjust our risk there because of the way the market was trading up there at the time, and how you would maybe lessen your contracts, or maybe your entry points, or whatever it is, to adjust for the risk. And those things are up there, and that's what you do as a trader. You can make the adjustments, or you can even cancel it all completely. So So those are the things that are out there that as a trader, you have the ability to adjust. And we were trying to walk you through some of those adjustments today as we were trading. All right, support would be around the 43 area. Again, if anybody, new folks here, if you have any questions, please write them down or type them out in the chat box area. And if you put the chat box to just the panelist only, I and Brad will see them, so nobody else will see them, so don't be afraid to ask any question. I like questions. Yeah, I mean, if things become a little bit more risky, you can make adjustments. That's all. It's really not that complicated. All right, things have quieted down here a little bit. The market seems to want to turn over a little. Maybe that news wasn't as productive as maybe they thought it was, but who never know? You never know if it was news or whatever. I couldn't find anything to give us any reason. Support will be back around the 43 area. Again, they've taken some of the excitement and juice out of the market this morning now. And we focus, for some of the new folks there, we focus more on the morning hours. A couple of hours in the morning, we get good ability, good ebbs and flows. And the next couple of hours, a lot of traders kind of take a little break and move away from it. Obviously, if there's some news that comes out, the market will react to it, just like it kind of did this morning. And consequently, you have to be prepared and adjust to the market conditions, the price action that was occurring, and that's what we kind of do here. We talk about the levels, but then again, the price action is also important so that we can give us a fair chance. Nice, nice trade there, Sardar. All right, looks like just they've taken some of the energy out of this market. It's just kind of hanging here. We like the support there at the 43, 40 area, 43 area. Otherwise, look for rotation back down to the 42, somewhere in that range, 43, 42 area. A little support. Next level on the upside we have is the 63. And right now we're just kind of going nowhere fast over here. Again, obviously at 57 is, again, it got triggered already, so might not is not the strongest play. We wanted it for all our levels. We want the first time to it. If they do, uh, get triggered, then they don't become viable, and we'll have to look for the next opportunity, next support or resistance level. In this case, it's going to be the 63 area. We gave you levels above 63. We gave you 70, 75, and 84. Support down at around, like I said, 43, 44 area. And right now we just have to be patient and wait and see what's going to happen. This is like right now, and this is like no trade zone over here. Only because it's can go either way here. You rally back up to the highs, or it can dip down a little bit. So if we're going to dip down, you're looking for good support areas. If it's going to extend, I guess maybe if you get above 58, maybe it's a little bit of a buy there up to the 63 area. Well, when we're placing a trade, we're looking for, at this point, 2 to 3 point stops. And I obviously have to work it a little bit. So, and again, that could vary with the volatility for any given day. But for today, it looks like 2 to 3 points would be sustainable or adequate to give you a fair chance to make a little bit of money. Like I said, if volatility is pumped into the market, it becomes a little bit different, and things might change. But for the time being, looks like that's where we're at. We're coming back down here a little bit to the 44, 43 area. Bonds upticking a little. We've come down here to this little support area, trying to see if we can bounce off of it a little bit. S&P, we could suggest a couple people. I mean, a firm for you if you want, if you're looking. Talk to Brad about that, but we can get you hooked up here. We have a few in Chicago, obviously, that I'm working with. Well, you gotta respect the 42 still. If you probably call Brad or let him know, and he'll let me know, and then we can figure out some way to get you set up. He'll come in here in a little bit and give you that information. My market is coming down here again to 42, 43 area like we talked about. Again, we're starting to trade here maybe below the blue band a little bit, so you got to be a little bit careful about that if you're trying to stay long. It's becoming a little bit of an issue. The market kind of turning over, so keep that in mind. Again, we're looking at the price action to help us with our trade. Doesn't mean that we fall in love with anything. Just kind of remember that, all right? And to keep your stop in. I'm just here to point things out that you might have maybe missed, so that way you stay focused. I would say right now, if we get below 41, at least for the time being, you want to be out of any longs. So there's your stop. Again, it's becoming, we had one bar close here below the blue band, so it's a little bit more risky than it was a little while ago. Again, nice rotation there off of the 42 area. Again, 42.5 was the low there, so that's what you're looking at. Again, you got to lighten the load here a little bit only because of the price action. So you got up to 44.5. And if you got in at 43 and 43.5 there, you got to take a little bit off the table only because of the price action. But your stop would be at 41. Make it a little bit easier for you, so you know where your stop is, and then see if we can't get this thing to uptick here a little bit, but respect the fact that we are trading here below the blue band. So you're getting a little bit of a rotation, and hopefully you made a little bit of money on this little support area. If you bought the 43, let's say, difference between 42, 43, and to get up here to 45. So if you bought them a little better, then that's even easier for you. Ooh, a big order coming there just to scare everybody. It's scaring somebody. But again, we were trying to tell you to lighten the load there, so hopefully you did. Below 41 out of any longs, and just kind of react to what the market's telling you, that's all. All right, seems like we're a little bit heavy all of a sudden, and the market here is just kind of drifting towards the downside. They like to take those markets, those big orders out. Just remember that. Anyway, but we worked. We're not getting the good rotations we were looking for, but at least we're getting a little bit of a rotation off of opportunities, whether they be price action or not. And that guy canceled, I think. Yeah, he did. So he scared the market, put it out there, and then took it off. Got the market to drift down a little bit, got his profit in, and now he took off his order. That's what they do sometimes. You can show a big order, get the week longs to get out, and he buys it, and then sometimes if you want to buy it, you gotta show that you want to sell it. You show a big number that you want to sell, and he buys it as it dips down. It's the old that's a little trick that they sometimes like to employ here while you're trading. All right, take a little bit of a break now. I'll come back in a bit.
Hey, a couple quick programming notes. Wanted to welcome those that are just joining us today as guests. Want to thank those that are joining us on a monthly basis as a subscriber to Sol Services. I just posted in a link for special discounts to Sol's Zoom room. This Zoom room, it's usually $379 a month. He's got it on for 100, so take advantage of it. If you get the 100, you get to keep it. For those that are coming in as guests, put up an S&P 500 E-mini chart. Ask Sol for a repeat of today's levels. We're here on a daily basis. I should say Sol's here on a daily basis. Sol is actively scalping for his own trading account. He's a CME Group floor member. He's been trading for 25 years or so. He is working with traders in the background that are part of his course and his mentoring work. In the foreground, he is working with those that are part of his monthly service. And for those guests coming in, welcome. We're here starting at 9 a.m. Eastern Time. We go through the morning session together. The morning starts out around 9:30. At the opening bell, Sol sets his levels, gives them out to everybody in audio. So if you miss today's levels, don't hesitate to ask in chat and send the question to Sol, who'll repeat them in audio. Starts out with a pivot, a price, and other levels on top and bottom of that pivot. These are Sol's levels for today's trade for his own trading. He gives them out as an opportunity to see how he's doing, what he's doing, why he's doing it. So as a monthly attendee here, you receive Sol's proprietary scalping levels. You go through the morning session interacting with Sol based on the trade. It is important to know that this is a taught experience. Price action trading is a trading technique that you can learn by working privately with Sol in private session, learning the entries, exits, and stops in and around his price action proprietary trading levels. So Aiken, welcome. Hey Arthur, welcome. Sean, welcome. Hey Brett, Carlos. Gerbakken, welcome. Hopefully I'm pronouncing that correctly. Hey Nadine, welcome back. Hey Osbeck, hopefully you asked for a repeat of Sol's levels. Hey Sam, nice talking to you. So on a daily basis, we're here. This is Sol's Zoom room. If you want to join, get the discount. Usually $379 is on for hundreds, so take advantage of it. Come and go as you please. And again, this is a direct focus on doing 2, 3, 4, 5 trades during a good morning session based on a price action trading methodology that Sol's been working on for about 25 years or so. This is your opportunity to really focus and buckle down and learn how to develop consistent profitability based on your own trading and be able to stand up on your own, trade with your own trading account, and develop a trading business. So that's what we do here on a daily basis. I did post that link for everybody to click on. It's PayPal. You sign up. It renews on a monthly basis. If you do get the $100 rate, it renews at $100. You're in control. It's between you and PayPal. You don't have to contact us. Once I see it go through, I do authorize you in the background. For those that are coming in for a while and not paying, I just kick you out. Don't take it personally. We are basically giving away Sol services, so I want to make sure that individuals take advantage of it. So the stepping stone is guest, welcome guests, pay for Sol's monthly, hopefully you get the discount, and then the opportunity to be part of Sol's course and mentoring work. And you do that by signing up for Sol's monthly and then setting up a time to talk to us personally and privately about being part of Saul's trading education and his course. So I'll be in the background if anybody needs anything. Don't hesitate to ask questions in the chat box. And if you missed anything, don't hesitate to ask. I did post our telephone number in Chicago if you want to ring us up. I'll give it out to everybody now before I step back. It's 312 685 2582. It's 312 685 2582. Thanks.